Bitcoin doesn't need a Santa rally to stay undefeated. The signal is stronger than the candles. Welcome back to the Bitcoin Fortress podcast. Today is December 28th, 2025. We are at block 929911. Moscow time is 1142 and fees are running at 1, 1, and 1. This week, fewer articles, more depth. We're going to go through a shorter number of stories, high signal only, so we can actually think instead of speed reading the headlines. All right, before we hit the headlines, here's the signal stack, the three forces shaping Bitcoin right now. First up, Bitcoin is trading like a macro asset again. Year-end liquidity is thin. And Bitcoin is moving with risk-on, risk-off psychology more than ideology. Second, ETF flows are the new tide chart. Not the whole story, but a daily sentiment barometer. And into Christmas, the tide went out. And third, infrastructure is bifurcating. Mining equity winners are increasingly AI data center hybrids, while pure Bitcoin miners lag. With that framework, let's get into the week's stories, grouped by theme, and I'll keep moving with what happened, why it matters, my take, and what to watch next. First up, we'll get into price, macro, and narrative. Year-end chop. Bitcoin ranges near the high 80s. Bitcoin stayed range-bound around 88 to 89,000 during the thin holiday trading. Thin liquidity exaggerates moves. People overreact to noise. The lack of excitement is often the setup for Q1 volatility. Volatility doesn't disappear, it stores up. And this is where conviction beats prediction, and DCA is better than vibes. What to watch next will be the first full trading week in January and liquidity returning. And if you're wondering why sentiment feels heavy, well, that's because fear ticked up as Bitcoin slipped towards 88,000 midweek. Reports highlighted extreme fear vibes as Bitcoin dipped near 88,000. So why does this matter? Well, sentiment tends to bottom before the price bottoms. Retail psychology is still a leading indicator for bad timing. And so fear is the fee you pay for asymmetric upside. Bitcoin's job is to be volatile. Your job is to be consistent. And I'm sure there's a little bit of that old, the 4-year cycle is here, sell, 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 bear market coming, etc. And that may be true. And Bitcoin may go all the way back down to 40,000. And if it is, then you're just dollar cost averaging into that, which is great. And if it doesn't, if the 4-year cycle's over, as some people say, well, who cares? What to watch next is options expiry and positioning catalysts, especially in early January. And finally, in this segment, the mainstream pushback. Gold beat Bitcoin narratives are gaining steam. Commentators argued investors chose gold over Bitcoin in 2025. And frankly, I've even seen a few about silver lately. Well, if you'd have bought silver 2 weeks ago, you would have beat Bitcoin all year, which is a fun little meme. Again, this is classic late cycle storytelling. Bitcoin is boring now. That narrative usually appears when the market is cleaning out the tourists. Gold didn't win. Gold did gold things. Bitcoin did Bitcoin things. Bitcoin's story is sovereignty, not quarterly performance. And again, when in doubt, zoom out. What to watch next? Whether the macro tailwinds shift back toward liquidity expansion or not. But certainly if you've been holding your Bitcoin lately and watching all the madness in the precious metals and in the stock market, you, I'm sure, are scratching your head going, am I wrong? Did I make the wrong decision? And that is exactly what you need to overcome and go, I have conviction and I'm just going to be patient and it's all going to work out. Next category up, ETFs, institutions, and Wall Street Bitcoin. First up, spot Bitcoin and Ether ETFs saw outflows heading into Christmas. Another wave of outflows hit on December 24th as traders reduced risk into the holiday break. Why does this matter? ETFs convert Bitcoin into a portfolio sleeve that gets trimmed when desks de-risk. It reinforces the idea ETFs increase access, but also increase correlation. ETF flows, though, are not adoption. They are simply allocation. Self-custody is still the end game if you want Bitcoin and not a ticker. And next up, we need to watch early January rebalancing. Flows often reverse when the desks return from the holidays. Next up, some hard data. Farside flow table shows multiple red days in a row. Farside's daily Bitcoin ETF flow data shows consistent negative days around December 22nd through the 24th. Why does this matter? Well, this is your weather report for price pressure. It helps explain range-bound Bitcoin despite plenty of bullish narratives. Again, you don't worship the flows, you use them as information. Flows explain pressure, not destiny. And what to watch next is whether IBIT and FBTC turn positive first, often a tell. Strategy paused, raised some cash, but didn't buy Bitcoin. Reports noting that Strategy paused buying after raising proceeds via share sales. So Strategy has become a market narrative engine. A pause changes the vibe. It also highlights a key truth. Corporate Bitcoin is subject to capital markets. The important part isn't did they buy this week, it's the playbook they normalized. If the premium compresses, the strategy gets harder. That's a feature, not a bug. What to watch next, whether they resume buys when liquidity improves or if they pivot toward balance sheet defense, raising more money, not buying Bitcoin, and just holding. 2025 Corporate Treasury Playbook spread beyond strategy. Roundups highlighted how corporate crypto Bitcoin treasury strategies broadened during 2025. This normalizes Bitcoin on balance sheets, even if many will fail the trade. It creates future forced seller risk and future copycat buyer cycles. My thought is treasury adoption is bullish, and it's not the same as citizen adoption. The cleanest version remains no leverage, long horizon, cold storage. And what to watch next? Which companies adopt Bitcoin without financial engineering? That will be interesting. Next up, we'll go through mining, energy, and infrastructure. Mining stocks in 2025, iron stood out. Laggards fell behind. CoinDesk did a year-end review and called out iron as a standout and BitDeer as a laggard, with a broader split between AI-adjacent miners and pure plays. Mining is becoming a power plus infrastructure business, not just hash rate. AI demand is reshaping capital allocation in the sector. The market is rewarding power strategy more than Bitcoin exposure. Meanwhile, the network just keeps ticking, unimpressed. Next up, we'll have to watch miner balance sheets and whether hash price stabilizes into Q1 of 2026. Van Eck, chain check, market structure and on-chain framing into year-end. Van Eck's chain-focused commentary highlighted how to read network market dynamics heading into late December. This will help you avoid the trap of price-only analysis and its useful framework for explaining miner behavior and investor positioning. The chain tells you who is stressed and who is patient. If you're a long-term saver, you're not competing with traders, you're outlasting them. And we need to watch next early January on-chain movement, which often reveals reallocation. Next up, we'll cover security, crime, and the cost of centralization. 2025 crypto theft hit record levels. So this is a security reality check. Reporting cited $2.7 billion stolen in crypto this year, a record pace per the blockchain monitoring firms. This reinforces why self-custody hygiene matters, especially for new entrants, and most crypto hacks are centralized honeypots or user error attack surfaces. Bitcoin fixes money, it doesn't fix human behavior. Bitcoin fixes a lot of things, but yes, not human behavior. Again, just a quick practical reminder list: hardware wallet, backups, phishing paranoia, no SMS 2FA, keep your setup clean. And next, we'll just have to watch whether exchanges tighten withdrawal policies, which often harms users, in an effort to combat the fraud, because that's always going to be the policy response. More regulation, more, we want to protect you. We want to help you. That's basically what the banks do. That's why you can't Zelle money to anybody that you want in any denomination that you want, because there's been so much fraud that they are telling you how to use your money. But Bitcoin doesn't do that. Next up, we will talk about payments and Bitcoin in the real economy. Square's Bitcoin payments roadmap, Lightning Rails, Merchant UX. Block previously outlined rolling out Bitcoin payments on Square using Lightning, aiming for broader availability into 2026, regulatory dependent, of course. This is what adoption looks like: normal merchants, normal checkout flow. And even if users don't custody, it increases everyday optionality. Merchants don't want a revolution. They want lower fees and fast settlement. If Square makes it boring, well, that's the win. Next, we'll have to see where it launches first, how fees, FX are handled, and whether customers actually choose to pay in Bitcoin or not. And of course, if you want to support the Bitcoin circular economy, what do? You buy and replace, buy and replace, buy and replace, buy and replace. And then you can use your Bitcoin for purchases. Stablecoin settlement expansion signals 24/7 money expectations. Shift4 launched a stablecoin settlement capabilities for merchants, not Bitcoin, but part of the same always-on money trend. Why does this matter? Stablecoins are the fiat UX upgrade that trains the world for internet money. They also highlight the difference: permissioned rails versus Bitcoin's neutrality. Oh, and by the way, especially in the US, now they don't pay a yield, so you pretty much don't want to have all your money sitting in stable coins. So what will people do? They will probably put it into Bitcoin for savings and then pull it out when needed for purchasing. Seems like a good plan. Stablecoins are a bridge, not the destination. They teach the market to demand speed. Bitcoin teaches the market to demand sovereignty. We'll have to watch regulatory pressure on stablecoin issuers and settlement networks. All right, moving right along. We'll get into the meta, Bitcoin culture, and positionings. Bitcoin ends 2025 lower, framing Bitcoin's long game. Reuters and others continue to frame 2025 as a roller coaster with a potential down year finish. Why does this matter? Annual return narratives shape public perception more than fundamentals. It's a great time now to reinforce our low time preference ethos and the fact that if Bitcoin prints a red candle for the year, oh well, as long as you were buying all along, and especially recently in the 80s, you were getting good cost basis going forward. Bitcoin doesn't care about your calendar. It does care about blocks and TikTok next block. The protocol's KPI is uptime and supply schedule, not CNBC feelings. We will need to watch next Q1 positioning once the tax loss selling and rebalancing clears. And I'm sure there's quite a lot of that going on. I've seen a lot of emails from different providers saying, don't forget to take advantage of your tax loss selling this year because you can do wash sale. There's no wash sale rule for Bitcoin. So you can sell your Bitcoin for a loss and book that loss this year and buy it right back at the same price and be able to take that loss on your tax return. Will be a little while, I'm sure, won't be too long before the U.S. government plugs that little loophole. Doesn't work with Bitcoin ETFs, though. I did a little research on that, and if you wanted to take a loss in your FBTC, let's say, and turn around and buy FBTC back or IBIT, those are treated like securities, and wash sale rules will apply. So beware, folks. Do your research before you start playing around with tax loss selling. Stepping back, Bitcoin isn't a trade. It's a personal standard. This week's cross currents, ETF flows, litigation, security, payments, all point to one fork: financialization versus sovereignty. Humility is how you survive volatility without turning into a degenerate, and we do not want to be degenerates here. Stacking sats is the antidote to the attention economy. Just buy and hold in cold storage and focus your attention on other things. Before we hit the featured Bitcoin Substack post, what themes were other great Bitcoin shows circling this week? So let's take a look at the Bitcoin podcast themes. First theme that we saw this past week: fiat distorts everything. Health, speech, incentives. TFTC's latest episode connects fiat incentives to institutional capture, here framed through healthcare and sovereignty. And by the way, I will include links to all the articles covered in the show notes, so check that out if you want to do a deeper dive for yourself. Theme 2, censorship creep and legal perimeter tightening. TFTC also spent time on legal battles over online censorship and the importance of defending open speech infrastructure. Theme 3, volatility is missing until it suddenly returns. The Jack Mallers Show explicitly framed the question why volatility feels muted and what that implies for the next regime shift. Theme 4, the why of Bitcoin remains the product. The Bitcoin Matrix conversation with Jeff Booth, always one of my favorites to listen to, and similar guests keep returning to first principles: technology, deflation, human agency, and the moral case for Bitcoin. If you zoom out, everyone is basically saying the same thing. Bitcoin is the exit, but you have to live it, not just buy it. Next, let's take a look at the featured Substack post for this week. Article is entitled "Stay Humble, Stack Sats." And what do you think it's about? Well, it's about staying humble and stacking sats. And what does that mean? So why does humility matter now? Again, range-bound price, ETF mood swings, gold headlines, silver crushed Bitcoin for the year in 2 weeks, all that kind of stuff. really requires you to stay humble. What does stacking sats really mean? It's more of a process, and the process beats the prediction every single time. Again, zoom out. And again, some practical reminders. Automate your buys. Reduce decision fatigue. If you know that you're going to buy every time you receive a paycheck, it's pretty easy. You just buy. And don't get cute. Don't try to buy it a week early or whatever. Just do it on the date like clockwork. Custody and UTXO hygiene matter a lot too, and good to pay attention to. And don't outsource your conviction to the headlines. All of that is noise. Just tune out the noise. Bitcoin is a mirror. It shows you who you are under stress. If you want to go deeper, check out my 3 Bitcoin Fortress books on Amazon. Bitcoin Fortress, Simple Guide for Beginners, Bitcoin Retirement and Estate Planning, and The Bitcoin Lifestyle. And with that about wraps up episode 196. Stay humble, stack sats, take custody of your time, your attention, and your money. If you found this valuable, please share it with someone who needs a calmer signal in a noisy world. And with that, I will talk to y'all next week. Bye-bye.